Good morning, everyone. Welcome to today's session. I'm excited to introduce you to the QRMP scheme step-by-step guide. Today, we'll walk through how to file your GST returns quarterly using this scheme. We'll cover the key steps involved, making the process simple and clear. So let's get started and make GST filing easier for you. Let's take a closer look at the Quarterly Return Monthly Payment Scheme, or QRMP scheme for short. This scheme is specifically designed for taxpayers whose turnover is up to 5 crore. The idea here is to simplify compliance by allowing these taxpayers to file their GSDR1 and GSDR3B returns on a quarterly basis. However, even though the filing is quarterly, the tax payments are made monthly. This helps in managing cash flow better and reduces the compliance burden. The payments are made using the prescribed form, which is PMT06. So, in essence, the QRMP scheme offers a more streamlined and manageable way for smaller taxpayers to stay compliant with GST requirements, balancing the need for regular payments with less frequent return filings. It's all about making GST compliance easier and more efficient for businesses of this size. Let's take a look at some key points to consider. First, if your turnover has increased up to 5 crore, it's important to understand how this impacts your GST filing process. Next, ensure that you've filed your previous GST returns correctly, as this is essential for maintaining compliance and smooth operations. Lastly, you should consider opting into the QRMP scheme on the GST portal. This scheme can make your GST filing process more efficient and less time-consuming. Now, before moving forward, the first step is to check your eligibility. This is a crucial part of the process, so make sure you review the criteria carefully. Understanding whether you qualify for QRMP will help you streamline your GST compliance and stay on top of your filings. Now, let's move on to the next important step, which is paying your taxes. You need to settle your tax dues by the 13th of the following month. This deadline helps ensure that taxes are paid promptly, avoiding any penalties or interest. There are two main methods for calculating your tax payments. The first is the fixed sum method, or FSM. This method involves paying a predetermined amount each period, which simplifies the process and helps with planning. The second method is the self-assessment method, or SAM. With this approach, you assess your own income and calculate your tax liability accordingly. It gives you more control and flexibility, especially if your income varies. Now, when it comes to making your monthly payments, you'll use Form PMT06. This form is essential for documenting and submitting your tax payments each month, whether you're using FSM or SAM. Connecting this to our overall theme, understanding these methods and deadlines is crucial for maintaining good tax compliance and avoiding any unnecessary penalties. It's all about staying organized and proactive with your tax obligations. Now, let's talk about the optional facility available for the first 2 months. This allows you to upload your B2B invoices through the Invoice Furnishing Facility, or IFF for short. You can upload invoices up to a limit of 50 lakh rupees per month, which provides a good amount of flexibility for most businesses. It's important to note the due date for this process is the 13th of the following month. So, you need to ensure your invoices are uploaded on time to stay compliant and avoid any penalties. Overall, this step in the process makes it easier for you to furnish your invoices in a streamlined manner, supporting your cash flow management and compliance efforts during the initial months. Now, let's move on to the next important step, which is reporting our outward supplies, or sales. This is a crucial part of our GST compliance. You need to remember that the due date for this report is the 13th of the month following the quarter. For example, if we are reporting for the April to June quarter, the deadline will be July 13th. This is when we file GSDR1 on a quarterly basis. It's important to stay on top of these deadlines to avoid any penalties or interest. By timely filing, we ensure that our records are accurate and our compliance is maintained smoothly. So, keep that date in mind and always prepare your reports a little in advance to avoid last-minute issues. Now, let's move on to the next step in the process. First, you need to declare your tax liability. This means you have to honestly report how much tax you owe for the quarter. Once you've done that, you'll want to adjust your monthly payments if necessary. If you've paid more or less during the months, this step helps you balance things out. Remember, the due date for submitting this declaration varies depending on your state. It's either the 22nd or the 24th after the quarter ends. So, it's important to keep track of your state's specific deadline. Finally, this step culminates in filing your GSDR-3B form on a quarterly basis. This is a crucial part of your compliance process, ensuring everything is properly documented with the tax authorities. Staying on top of these steps helps you avoid penalties and keeps your business compliant. All right, let's take a closer look at the quarterly due dates for various GSD filings. First, we have the PMT-06, which is due monthly on the 13th. This is an important reminder to ensure that your monthly payments are always made on time. Next, the IFF, or Invoice Furnishing Facility, is optional but also due on the 13th. While it's not mandatory, timely submission can help streamline your compliance process. Moving on, the GSDR-1, which reports outward supplies, is filed quarterly and must be submitted after the end of each quarter, also by the 13th. This helps keep your outward supply data updated. Finally, the GSDR-3B, the summary return, is due quarterly as well, but the deadline is a bit later, either the 22nd or 24th, depending on the quarter. Keeping track of these deadlines is crucial for staying compliant and avoiding penalties. Overall, understanding these key due dates helps us manage our filings efficiently and ensures smooth business operations throughout the year. Now, let's talk about some important tips to keep in mind. First, always reconcile your records with GSDR-2A and GSDR-2B. This helps ensure that your input credits match what's reflected in your returns and avoids any discrepancies. Next, it's crucial to maintain proper invoice records. Accurate record keeping makes the reconciliation process smoother and helps prevent issues during audits or assessments. Additionally, make sure to pay your taxes on time. Delays can lead to an interest charge of 18%, which can add up quickly over time. And if you're late in making payments, there's a late fee of $50 per day. However, if your return shows a nil tax liability, the late fee drops to $20 per day. These tips are essential because they help you stay compliant and avoid unnecessary penalties, aligning with the overall goal of managing your GSD responsibilities effectively.